All right, happy 4th of July. It is Evan here from the Trade Risk. It is Friday, July 3rd, day before Independence Day here, and I am recording a quick video. Had family in town, holiday, kind of last minute things going on, so I wanted to do a quick video. I'm off camera. There's a few important things we want to talk about. We started to talk about this theme last week. We had the Mag 7 weakening, rolling over. That didn't start last week. Let's be clear. That started about a month ago. We were pretty on top of that. In fact, last week we said, now that everybody's talking about it, it's more likely that we're going to put in some type of bounce and low because everyone's focused on Mag 7 underperformance. But what we did say last week was, hey, we really need to see that AI infrastructure, basically talking semiconductors, hold the line. We really wanted to see the bulls defend that upper support area, and it started to show some signs of cracking this week. We did get some rotation, so let's just get into it here. Let's get through some charts. Let's look at where the opportunity is. So I think we need to start at least Friday, mention anyway, the jobs report once a month, right? Economists were basically expecting over 100,000 jobs created. Instead, we got basically half of that. So we had some unique sort of pressures here at the end of the week. This wasn't Friday, this was Thursday's trading session to go out of the long weekend. And when we look here at the price action of what I consider the most important spot of the market right now, it was semiconductors. And last week, we very clearly said this can all remain very innocent, healthy, and bullish, constructive. Ideally, in my head, we hold a higher low above 600. That's what I wanted to see throughout this week. And things were sort of good until, of course, Friday. Notice the volume pickup here on Friday. I keep saying Friday. I apologize. It's just in my head. Thursday was, because the holiday shortened week. So Thursday, we started to crack and close below the 600 level on heavier volume. So this puts it squarely in the penalty box for me on semiconductors, and this opens up a more meaningful possible pullback here. All right. So we can draw some levels of prior swing support. We'll look at that more so in the second half. Now, fortunately, everything was not sinking. So this is IGV. So this is software stocks. And so this was sinking pretty consecutively here all throughout the month of June. And then we got kind of a break up and out. We had follow through here to start the week. I posted about this right at the beginning of the week saying, hey, we got some follow through in software stocks. That looks nice. And we continued to rally throughout the rest of the week. Now, Meta was in the headline this week because they're looking at SpaceX, I suppose, and saying, hey, they can sell excess compute. So can we, because we've been one of the most aggressive buyers of the hyperscalers when they don't have the true size of other hyperscalers of buying up all of this compute. And maybe they don't have efficient use for it right now. Bottom line is they said, hey, we'll sell it out and we'll generate some revenue that way. Now, Wall Street loved it out of the gate here. So you can see a big 8-9% pop above 600 after that headline. And then on Friday, though, we quickly sort of took the air back out of it and we came back down and filled the gap. Meta has been a very difficult place here for quite some time. It's trying to pivot, transition. It's spending aggressively. I think lots of folks want to give it the benefit of the doubt, but also, this is a ton of cash that we are seeing invested here. And so the jury's still out, but for now, Meta is still in the penalty box. Another thing that's interesting this week, especially on Friday, this is where, rotation and this swift sort of changing into the quarter end, into the start of the third quarter, all of this kind of shifting and happening pretty quickly here. But this is SPHB relative to SPLV. So basically, this is high beta stocks versus low beta stocks. And so the high beta stuff has been the place you want it to be over the past, well, I guess all of this year. And we're starting to see some volatility here, and we're starting to see maybe a little bit of a topping pattern, some type of pullback, retracement, screaming kind of rotation. we want to keep an eye on this, but it was not a good look here on Friday. So looking at the numbers, S&P was still positive this week, 2%. Dow Jones as well. Gold finally rebounding. Qs were up 1%. So all in all, the equity market did hold in there this week. Don't forget, they had a terrible last week. So last week they were down sharply. This week they started to rebound aggressively, and then they rolled over towards the end of the week. Now, before we continue any further, our sponsor of the show is Investors Business Daily. We've got links in the description of the show, so once you get done watching, check out, grab those offers, and tell them Trade Risk sent you. All right, S&P here. So still range bound, still not doing a whole lot. 720, 760, that is your choppy summer range. VIX back down to 16. So fear coming out of this market. Dollar index rolling over sharply here on Friday, and 10-year treasury yields bouncing this week, but still kind of in a general pullback. What you don't want to see is a breakout and a push higher here in rates going into next week. Now, your top winners this week were financials, communication services, and discretionary. Don't forget, we're going to have earnings season around the corner here. So financials will be squarely front and center, and then we'll see how everything follows. Utilities, energy, real estate, those are your losers. On the positive note, breadth continues to be supportive here. So we are still sticking a durable 150 to 200 stocks, advancing to 52-week highs day by day. So from a breadth perspective, things are at kind of the best ratios we've seen underneath the hood. And you can see on the stocks hitting 52-week lows, we're basically drying up. Percentage of stocks above a 20 SMA, again, speaking of breadth, continues to work. Put to call ratio, remarkably kind of high here towards the upper standard Bollinger Band. Bitcoin. So this is one of the transition rotation stories here going into the third quarter. I'm going to talk more about this in just a little bit, but we managed to hold above 60K. We probed below and looked very dicey here on a number of days, 58K, and just couldn't get any big selling pressure to manifest, and we ended up squeezing back over this pivot low here from early, or I guess I should say late May. And we're on the rebound, so we'll talk more about that in just a second. Let's take a look at some charts. All right, so we've got some charts in front of us. S&P 500, again, I don't have too much else to say about it except for range-bound choppy behavior. That's still what we're getting here. In fact, I like it. It gives us fuel for the next move. It gives us more technical certainty to sort of plan our trades and momentum and breakdown levels. So this to me is very welcome. Just under 7,300 to about 7,600. That's our 300-point range for now, and we're pretty much in the middle of it / grind into the top of it. So I think that's kind of the way I'd still frame this out. Same thing for the Nasdaq 100. We've gone nowhere now for about a month and a half, almost 2 months. So we're basically trading at the same price we were coming into the start of May with a lot of chop. Ranges have clearly expanded. We talked about this last week. Look at the size of these daily ranges here each day. So that shows that there's volatility, there's shuffling underneath the surface, there's, kind of anxiety behind the scenes, but price is still kind of stalled out and not really moving too far. Russell 2000 has the clearest upward slope here, but even it is pretty stagnant here going sideways. Now, I think this is where we should pull in our own market health models because we track this very closely from a swing trader's perspective. And we are still in the strong swing environment based on our research and work. It's 59-day streak. So since April 9th, we have been in the strong swing environment. And if I scroll down to this chart here, you can see that even despite all of this recent chop here, our model is still saying you want to be looking for opportunity, you want to be invested, you want to be taking shots on the long side. That's where the evidence still stacks up. Now, we're definitely kind of weakening and we're getting closer to this transition period. And we're also getting long in the tooth on this 59-day streak. So there are things that can tell us that we're kind of mid to late cycle, but it does not mean the cycle's over. I'll continue to say that each week, until the evidence tells us otherwise. And in fact, when we look at some of our supporting evidence underneath here, so market internals, they're still bullish. Sector leadership is still bullish and industry participation is still bullish. So for us, we still want to be out there taking shots on the long side, but there is rotation happening here. And in fact, if I just go to our homepage, I think we can see it here. We have 7 sell signals for tomorrow, or for Monday's open. So we are seeing a lot of rotation happening within our momentum portfolio. And in fact, if we look at Quant Rockets right now, it had 15 exits this week. This is the highest number of exits we've seen in some time. Exits do not necessarily mean losers. These are a lot of big long-term winners that we're finally getting out of right now. We'll look at some of them in just a little bit, but we are seeing again that rotation under the hood where Quant Rockets has been very AI infrastructure heavy and has, rode those trends up. And now we're starting to see sell signals, still a few buy signals coming through and still hitting some profit targets, but rotation underneath the hood. So we're going to come back to this in just a little bit, but that was our market model. I should say though, back to the Mag 7. Let's look at the Mag 7 real quick. We did get one upgrade this week and it was Tesla. Tesla went bullish for us. We're leaning bullish, so still not a strong sign given the sell-off that it had on Thursday, but we are seeing improvement across the board here. And like we talked about last week, we started to get bearish on the Mag 7 at the start of June. And it seems like the noise around Mag 7 underperformance really picked up at the end of June. You started to see all the articles, commentary, pundits kind of coming out and talking about the Mag 7 underperformance. And that's why in last week's video, I said, with all of that, pickup in Mag 7 underperformance chatter, it's probably going to be a point of a bounce, at least a bounce. And now we'll see if it can be a big enough bounce to repair damage or if it's just still in the context of a downtrend. So far, Tesla was the first to break back up into a bullish posture for us, but everything else here is still kind of on the downswing. All right, let's look at more charts in TC2000. So a couple of other things I wanted to talk about this week was defensives. So consumer staples, particularly on Friday, caught a pretty nice bid. Up 2% here for staples. I know it's a very boring part of the market. It's quite honestly not a market, not a sector of the market you really want to see leading or getting a lot of momentum. But I do think underneath the hood, so something like Walmart, which I posted this chart on social this week, finally entered about a 20% correction on the lows here on Wednesday. And you can see, it's been in a very monstrous kind of uptrend here, very healthy, very orderly. And you finally got about a 20% pullback, which has happened about 3 times over the last 10 years. And that has always, or in the last 10 years, has proven to be good kind of opportunities to do some buying. I get a nice rebound here, but just notable, Costco, you can go down the list, saw a big bounce on Thursday as well. So again, I know it's not a sexy part of the market, but some of these bounce, some of these candles here that came in on the end of the week could mark some type of durable low on some of these defensive areas. And if you're a little more skittish on the market, you could look at some rotation into, a Costco, Walmart. McDonald's is not quite defensive, but certainly, catching a nice bid here in lots of these kind of bellwether names that can still move a decent amount if you're on the more defensive side. So I think consumer staples are just interesting. From that perspective, healthcare is obviously the clear beneficiary and rotation spot. We talked about this last week, rotation into healthcare and into biotech. This is still a stampede. Look at the volume that's been coming in here on XBI, IBB, XLV, all of these, and you can break this down even further. We have all-time highs here in healthcare. We have highs and relative highs here in biotech, and a lot of those stocks are working. So that's where there's definitely some energy and rotation flowing. And same thing with financials, especially Thursday here. They got a nice follow-through day. Look at the volume that came in. Look at this nice range consolidation where we broke out, and it looks like they're on the march higher here for those prior all-time highs made at the start of the year. Meanwhile, again, banks like JP Morgan are going to be reporting in the next, I think, 2 weeks or so. Bank of America, all these names are going to be coming up pretty soon. So that's where there's definitely some opportunity right now in rotation land. Not the sexiest plays, but it's working. You could also throw software in there, though. I mean, software did get a bounce, and it was pretty meaningful. I mean, the pattern here is a little, to be desired here on a longer term bullish perspective, but there's some short term momentum. Names like Palantir, who, Alex Karp was out in the news and making a lot of noise, bringing some attention maybe to this space, but they got as low as about $106 until they fueled a nice bounce. The one standalone here that's not bouncing is Oracle. Oracle is really just trading terribly and just looking like it wants to go probe these recent lows. I don't know if there's value here. I still have not own this. I don't think ever. Maybe I'll need to sharpen my insights on this company below 130 or something. But for now, there's absolutely no appetite for it. But again, when we talk about these types of plays, if you look at something like CoreWeave and some of these AI infrastructure plays, they all fell absolutely off the cliff on Thursday. So look at Iron here is now back in a, 40-50% drawdown. You can look at something like a Nebius, which is still doing fantastic this year, but picking up on its drawdown. Cypher, all of these names that are basically, the data centers filled with GPUs for AI compute were all spilling over. Part of that, again, was Meta, I think, spooking the market on maybe its ability to now have a lot of excess compute to sell. It's still unclear as to whether or not these other proxy plays should be selling off. I'm not smart enough to claim that myself to know, but I think it's worth paying attention to for opportunity. Semiconductors. So this is where, again, I think the 600 zone is the most important level that we wanted to see hold. We started to break below it. And again, the volume was pretty significant here on Thursday. In fact, if you zoom out as far as you can go on the semis, this is basically the heaviest dollar volume traded day ever. And if you look at all the heaviest prior dollar volume days, they've all come on the downside. So you have some signs here of distribution and profit taking. And so the question you really need to ask yourself is this trade over? Is the AI hardware trade over for the foreseeable future? Call it 3 months, 6 months into the end of the year? Or are we taking a pause in the cycle? And is this a, good buying opportunity? I think those are things you need to start thinking about here. And for me, the way I would answer it is just really spending time looking at the technicals and looking at how far this pullback takes us. For now, it looks like, somewhere in this zone, if we can contain the pullback from, 530 to 565, then I think you could still be relatively innocent and you can have a 21% pullback in the semiconductors after a 80% run higher and still be considered to be very constructive and positive. So for me, I want to see, the buyers start to step in. I want to see things slow down from a range perspective, and I want to see stabilization. For now, I don't think you're getting that here. I think you're getting kind of expansion and signs that you want to probe lower. And so that for me is a little bit of caution. And it is a caution from the index perspective as well, because semiconductors have grown in the weight in the major indices. So we do have to keep that into perspective now. So for me, all eyes are on semiconductors. And as higher beta proxy plays, you can look at these AI infrastructure names and you can start to see if they get a bid pretty quick, because they might even bottom first. And so they might have some clues there. Let's talk about Bitcoin real quick. So Bitcoin is catching a little bit of a bid here into the end of the week. There's been so much panic, anxiety stories. It started a long time ago with just whale selling, and then quantum fears, and then, MSTR, obviously most recently fears of blowing up and taking down the market, which I think is nonsense at this stage. Point is it seems like, particularly with MSTR kind of calming the market a little bit with their capital plan that they put into the universe on Monday, increasing dividend coverage and trying to clean up the debt ratio, or just the plan of action to pay these obligations. to ease the market, and that seemed to work. We sold off to about $82, got a 20% bounce here. And so for me, next week, I think MSTR reclaiming the February lows would be a very important level, milestone, sentiment kind of gut check here. If we start moving back over the February lows in MSTR, then you do need to respect that move. That I think the fear and the panic selling got a little excessive. And I think for Bitcoin, it's very similar. If we start pulling above the February lows here in IBIT, let's just call it, of 35.30, I think you have to be on watch for a squeeze, because try as hard as you might here to break this market down, and everybody, saying there's going to be a bottom in October and we're going to 40K, the type of confidence you start to now see the bears have in Bitcoin should get you just a little bit, get the antennas kind of perking up. And now if you combine that with some type of move back over the February lows, I wouldn't want to be short Bitcoin if IBIT is above 35.30. Let's put it that way. I think there's a high potential of some type of squeeze and then some type of basing action. So I like the potential here. There's some energy, there's some rotation. The cues were red towards the end of this week, selling off. We saw Bitcoin nice and green. So maybe it's getting a little bit of its luster back. But again, the technicals from a broader perspective are still very much damaged. Our long-term system Galahad is not involved in Bitcoin. All right, so we can say that much. But tactically, I think if you start to, again, reclaim some of these levels, I think you can be long from a tactical perspective. But our long-term trend model is still not involved. All right, we're going a lot longer than I thought we were for a short video I was expecting. What I want to show you is let's go back to Quant Rockets here and let's just look at these names. So I wanted to show, SanDisk, which we have been involved in for 60 days. A fantastic winner, hit all our targets, but take a look, it's right at our exit zone. And this is what I mean about finally hitting a lot of our exits. So a lot of our momentum that we've been involved in, concentrated in this AI build out infrastructure plays, are all starting to roll over. SanDisk here, wouldn't be surprised if we're out of this or get stopped out of it early next week. Same thing with SOXL. This was an entry coming out of the depths of April at $74. We hit all our targets. Our stop is basically right here. So our algorithm's basically ready to throw these stocks out or throw these ETFs out right at the sign of further weakness early next week. Throw Micron in this category as well. And this is all just an illustration of, kind of the shakeup that we're seeing. Now, in terms of winners, I'll show you the same two that I showed earlier or last week, because they're still showing pretty good strength in its healthcare. NTRA, so is continuing to work here. Exit zone starting to move up, and we did hit a first profit target. And now take a look at LABU. So this is the 3X ETF on XBI. This has gone vertical. This looks very similar to Semiconductors, SOXL in April, and it has hit a second profit target going into the weekend. So the point of Quant Rockets here is that it's going to be hunting out for this rotation. And I think where it finds that rotation is going to be of importance and some signal for us, quite frankly. And if we take a look at the composition of the portfolio here, you can see industrials, healthcare, right? Financial services, we're starting to move up with some newer things. And so that's what I'm going to be keeping my eye on. And I would imagine that this momentum portfolio is going to point us in the right direction of these hopefully next future winners. Maybe software, right? Maybe crypto related things will start to show up here, and that'll give us some ideas as to what's happening. So that's it. That's what I have for this week's video. Again, enjoy. Happy 4th of July. Enjoy the holiday off. And we are officially in the third quarter. We got July that is kicking off here. The summertime heat is here. So lots of fun stuff. Thanks as always for tuning in. We've got links to our trading systems, Quant Rockets, Galahad, our market navigator, and we did introduce last week our AI connector. So now you can hook up Fable and you can start interacting with our research data signals and start building and constructing some powerful portfolios and trading systems yourself. So check all that out on our website. Thanks so much. Have a great weekend. See you back here next week.